Welcome to everyone. Thank you very much for taking time out to join us today. I've just got a couple of questions here. View audio options. I don't. So I've got a question from a chap called Marcel, who says he can't hear anything. I wasn't talking, so hopefully you can now. Um, and people can see my screens. So yeah, I'm just going to start the webinar now. So welcome everybody. Thank you very much for joining us today. There's obviously been an enormous amount of change going on with the government support available, and what we wanted to do was just make sure that there was an opportunity for people to hear from us at Crunch about what support is available. My name is Jake Smith. I'm our content strategy and communications manager, and myself and my team have been responsible for getting all of the support up on the website and the hub. Hopefully those have been useful for you, as well as various emails and things that have been coming out. And I'm really pleased to say that I'm joined today by Michael Awuye, who is our senior technical accountant. He is responsible for trying to make head or tails of all the information that comes out from HMRC and pass it over to us and you guys. It's nearly all clients on the webinar today, but for the people who aren't yet a client, who are Crunch, we're an online accountant based down in Brighton. We've helped tens of thousands of people set up and run their businesses over the last 10 years or so. We've got a massive amount of support and tools and resources available for free on our Crunch website, which hopefully you've seen. Just some stats about that: over 9 million page views from over 3.4 million visitors each year, which is quite amazing. And since February 2020, we've had more than 160,000 views of all our COVID support material. We've just recently launched some free software, and we've always had available our complete accountancy packages for sole traders and limited companies. But I think that we're mostly clients on this webinar, so welcome to all of you. You'll already know all of these things. So what I wanted to say is that what we'll basically cover today, we'll go through what the main support schemes from the government that are available. We'll go through some of the other government support that's available to anyone, not just businesses. And then we'll also have a little bit of time at the end of the webinar where we talk about what you can do to make sure you come out of lockdown as well as possible, and some of the useful resources that we've got at Crunch. So what we'll do is we'll start with this slide. So hopefully everyone can see that. We will make sure that the slides are all available to everyone. We're going to go through most of these things, so I'm just going to absolutely whistle through this, but effectively, depending on the type of business you are, depends on the type of support that you can get. So we've got a column showing whether the support's available for sole traders or partnerships, and we've got a column showing whether it's available to limited company directors. I think most of the clients that we had joining today are limited companies, but I think we'll cover the sole trader things as well anyway. So the first support that's available is the furlough scheme, or the coronavirus job retention scheme, to give it its snappy title. You can still access this at the moment. There's an important deadline coming up on the 30th of November, which is the last date when you can make a claim for periods up to the 31st of October. And from the 1st of November, what's being called the extended CJRS has been in place, which is broadly very similar to the scheme that was available in August, I believe, so it was up to 80%, but we'll cover the details on that in a bit. That scheme is due to be here till the 31st of March. at which point allegedly it will be replaced by the job support scheme. We aren't going to cover very much detail on that because although that was due to come in at the beginning of November, it now isn't. So whilst we will show what it was going to be, that obviously is subject to change by the time it comes in. Then if you're a sole trader or a partnership, there's the self-employment income support scheme. That is grants that are available. There have already been 2 rounds of grants, and there is a 3rd grant that should be available imminently. We'll cover that shortly. Then there are a couple of loan schemes. The one that's probably most appropriate for most of our clients is the bounce back loan scheme, and we will be covering that later on, but that's available to more or less any UK business, and the loans are going to be available until the end of January. There's a slightly bigger scheme which we'll cover briefly. This is if you need a loan of over 50,000. That is also still available up till the end of January. We're talking here about delay to VAT payments. The VAT payments that were due between March and June were deferred. Those are the only ones that have been deferred so far. So if you are VAT registered, you should have made sure that you were still submitting your VAT returns, and there is a delayed period for the payment that you were able to skip. There's a delayment to company accounts. You can apply to Companies House, and I believe they automatically grant a deferral for your accounts, although we're recommending that any of our clients do actually get their accounts done if it's at all possible. There are various reasons, we'll go into that later on. Any business that has employees is able to access statutory sick pay for those employees, and if it's as a result of coronavirus, then the government pays you sooner than if it was for any other sort of illness. There's a delay to self-assessment payment on accounts. So the payment on account that was due on the 31st of July this year, that was able to be deferred up until the 31st of January 2021, so the January coming. And obviously also at the end of January this month, at the end of January is the self-assessment deadline for the 2020 tax year. So that's for the period from April 2019 to April 20. So that self-assessment, you must still make sure you make your filing, but there are you are able to delay the payment of any tax owed. So that includes the payment on account that may have already been deferred, and the payment that would otherwise have been due on the 31st of January. I'll cover that a little bit later on. There is universal credit available for people who aren't able to access support through either the furlough scheme or the self-employment scheme. We'll cover that a little bit later on as well. And then finally on this slide, there are mortgage and or loan repayment holidays. This allows you to have up to 6 months deferment of your loan payments or your mortgage payments. There will still be interest accruing as you do this. So, but you know, again, it's support that is available should you need it. Michael, did you want to cover anything else on this particular slide at this time, or should we pick them up later?
No, we can pick it up later.
Okay, great. Right, so we'll move on to the next slide. So this is the scheme that is probably most likely to be available to our clients if they need to furlough themselves. So you are able to furlough yourself if you're a limited company director, and you are now able to do flexible furlough, which means that you could effectively be working part-time. The scheme's available to any employers who have employees, as it says there, including limited company directors, and it's a taxable grant, so it's not repayable, which is good if you can claim it, but obviously as a limited company director, the big disadvantage of this is it doesn't cover any income that you receive through dividends. It would only cover your PAYE salary that you pay yourself as a director. As I said, if you do have employees, then obviously you should be claiming on this for your employees if you have been furloughing them. The important thing about the extended scheme that launched from the 1st of November is that you are now able to furlough people for a first time. So on the outgoing scheme, you had to have furloughed them, I think it was by the end of July, but that date will be on the next slide. But what else would you like to say about this scheme, Michael?
I think one of the bits also is to do with those who are new to the scheme. Obviously, if they filed a payroll between the 20th of March to 10th of October, then they will be eligible. But then those on the old scheme, so those who are furloughing from March onwards, for them it's business as usual. It will be back to the points they were in August, where the government was obviously paying the 80%. They would have to use the rates they were using then on. There was something that came up quite recently because there was some confusion as to the amounts to use for the old, or those who are on the old scheme anyway, in terms of the salary amounts they could claim. They still have to use the old amounts they were using. Those who are new to it can use salaries they've declared between March to October. That's one of the major.
So is that people who are new directors of new limited companies, or is it if they have not furloughed themselves previously?
It's both. So if they haven't furloughed previously, some weren't eligible because they weren't probably filing their payroll before the 19th of March, which was a cutoff date, and the rest. And then you might also have new companies. All of these two groups weren't eligible, so they will be eligible now if they've been filing their payroll between March to October. Every RTI submissions they've done, is the figure, or let's say the 80%, will be based on their average salary filing.
Yeah.
Whereas those who are on the old scheme still have to use whatever their salary rates were for 2019-20 tax year.
Yeah. So in a nutshell, if you have been claiming furlough prior to this new period from the 1st of November, then you'll have to continue any furlough calculations based on the salary that you were already claiming through furlough. If this is the first time you furlough, then the amount of salary that you're allowed to claim for is based on whatever regular salary you've been paying yourself from what was the date you said again, Michael? Was it April onwards?
Yes. So
okay.
Onwards.
Yeah, okay. We did have a question in about this which said, when you work out your average hours worked, what time frame do you use to work out the average? So presumably this is about if a director was intending to flexibly furlough themselves, how do they work out what their average hours worked are?
I think this is a bit of a complicated one, and we've got a calculator that helps individuals do it anyway. But the starting point is that you first of all have to have your contracted hours, okay? And then once you have your contract, let's just assume that someone works 40 hours each week. That is going to be their contracted hours, and then they will then decide how many hours they want to furlough the employee or the director for. Now,
how does a director, sorry, Michael, just one question. How does a director decide what their contracted hours are?
That is the major problem, because directors obviously wouldn't put themselves, or they wouldn't have contract of employment with their limited companies because they are PSCs. So the whole point is that if they want to do this, they obviously should have a contract drafted between themselves. Part of the furloughing itself is that you have to agree contracted hours with whoever the employee or the director is, okay? So it will be incumbent on the director himself now to probably have a contract, state how many hours they are supposed to work for their company, and then they can then furlough based on the contracted hours. Most wouldn't have it, so it's more like they work all the hours they've got within a day or within a week. And that is a major problem for most directors. So you need to get, let's say, a contract in place if you want to do this.
Okay. It can be very complicated, and one of the important things to point out here is that for most directors who are paying themselves a tax-efficient salary, the amount of support that you'd be able to get on the CGRS is likely to be relatively low, isn't it? I think it's only sort of just over £5,000 if you completely furloughed yourself. Is that right, Michael?
Yes, yes. I think anyone who was listening to the radio this morning would have heard the Chancellor being asked about it, and it seems like he's not going to change his mind about the dividend aspect of it. So unfortunately, if you were paying yourself the recommended salary of around 700 the rest, you're looking at getting around 515 or 525 pounds or thereabout a month. And yeah, that's all you would get anyway.
And then if you are flexibly furloughing yourself, you obviously can only claim for the hours that you have contractually said you're not working.
Yes.
So yeah, that has to be a sort of something that HMRC would deem to be acceptable. Do we have any guidelines on whether 50% of the time is okay or 75% of the time is okay, Michael, or is it really individual situation?
It's individual situations anyway, but we do the calculator we've got calculators for both scenarios, those on the old scheme and then the new scheme as well. So probably it might be one of the things we could also send out as well to clients so they could probably use that one to work out their individual circumstances, and then obviously we could help them answer any questions they have specific to their issue.
So we do have a service at Crunch, and it's an additional service if you need us to make CGRS claims for you. And you can speak to your client managers about that. We've had another question about this, saying, why is a contract necessary? Will this need to be provided to HMRC as evidence of the part-time furlough? I think the simple answer to that is yes. Part of the terms and conditions of the scheme is that that any furlough, whether it's flexible or full-time furlough, has to be agreed contractually before you can go into it. I think we did on our website, on our CGRS article, there is a link for a draft letter that you could effectively send to yourself. But yes, I think, Michael, it's correct to say, isn't it, that you could be asked to provide that to HMRC, so you need to have done that.
Yes, and HMRC are also trying to basically, I mean, for them, if they don't have to pay this, it would be good for them anyway. So as part of tax investigation, they could probably ask for you to provide evidence of you going through, let's say, processes to make sure that you've actually furloughed someone properly, and then they can then work back on whatever calculations you've done, compare it to what is on a contract. So it's vital that people do this.
Yeah. So I mean, I guess the challenge with these things is that everyone wants to be able to get the support that they are entitled to, but it is quite hard for directors to get any meaningful support. I think these rules haven't made it easier. They've made it easier for you to potentially claim if you haven't claimed before, because you now could claim, and you now could claim under flexible furlough, but the support you're likely to get from it could be not what you need to cover yourself. I think with all of these things, it has to be, if there is any way you can get contracts or work that does cover yourself and not have to furlough yourself, that would usually be better. But I'm aware that's easier to say than do sometimes. I think the only other things to cover on this scheme from the 1st of November that's slightly different is there are deadlines for when you have to make each claim by. So, for example, the claim for November, because the scheme didn't go live until the 11th of November, you can backdate to the 1st of November for any claim, but your claim must be submitted by the 14th of December, and then subsequent monthly claims must also be made within 14 days of the month end. So December's one has to be made by the 14th of January. If you do have employees and you have made any of them redundant, then it is possible to re-employ and furlough employees. We've had one final question on this. I've read that you can fully furlough yourself and then work as self-employed, not through your limited company. Are there any consequences to this? Michael?
Yeah, being self-employed simply means that you're a sole trader. So that is still fine. If you're furloughed, then that's fine from a company point of view. The only thing to watch out for is that if, let's just say that you have maybe 3 clients in your limited company, and then you furlough yourself and then become a sole trader, and then you're doing the same work for these 3 clients as a sole trader, then it then looks more like tax avoidance, because you're trying to basically shift income that is supposed to go to your limited company to your sole trader and then claim the furlough. So that is the only, if you've got new clients you want to service as sole traders, then that's fine.
Yeah, I mean, I think their intention with this being allowed was that it would be effectively you'd be doing something different. So
Yeah.
if you were a professional photographer as a limited company and you then set up as a sole trader professional photographer, I don't think that I think it's very dubious as to whether HMRC would see that as playing by the rules.
Yeah.
So I think you would have to be very, very careful if you were doing things like that. And as Michael says, obviously working for the same clients as a sole trader as you had as a limited company would be a complete no-go.
Yeah, I think the scenario that HMRC came up with, I think they used someone who probably was maybe into IT or so, and then probably becoming a delivery driver, something as a sole trader or so. So those were completely different businesses. So
yeah.
yeah.
I think you'd need to be very careful if you were intending to do that. A final one on this subject: does tendering and business development count as work for the company? Yes, it does. If I'm looking for work, does that mean no furlough? Not necessarily, not 100% no. The only work that you're allowed to do if you're completely furloughed is your sort of statutory duties as a director, which means working to produce accounts or file payroll or anything like that. You can't do any business development if you are completely furloughed. But that is an example where if you had no work, but you were doing some work of business development, that is an example where you could consider doing flexible furlough. So you would need to decide how many hours you were able to do business development. If you usually worked 40 hours, you might say, I'll do 20 hours of business development. Therefore, you could claim flexible furlough for 50% of your time when you're not working. In that 50% of the time, the letter of the law says you could not be doing business development, says you must not be doing any income generating work, including business development, I believe, for your company. So it's not necessarily the fairest rules, but those are the rules. Anything to add to those, Michael?
No, that's it.
Okay. The next slide we've got, I'm not going to spend very long on it because this is for the scheme that the last period that you could claim for is the 31st of October. So anyone who is claiming on this scheme probably knows the rules and has been doing the claims already. But in October, the government would have been paying up to 60% of employee wages capped at 1,875. Flexible furlough and things like that were available. As we said before, the most important thing to remember here is if you were claiming under this outgoing scheme, you must make your final claim by the 30th of November. The only other thing I'd probably pick up on this slide is the government had previously announced a job retention bonus of £1,000 payable to any business that was still employing furloughed employees in January, but because they have now extended out the CJRS, they've put that on hold and said that they will look at that at a future date. So sadly, that definitely isn't going to be available in January, but the extended CJRS still will be. Anything to add on this slide, Michael?
No.
Okay, so then if you're a sole trader rather than a limited company, there's a self-employed income support scheme. So this is a taxable grant based on your average self-employed trading profits, and it's payable in sort of multiple tranches. It's not available to limited companies. And you must have submitted your 2018-19 self-assessment. So that would have been due last January, the 31st of January 2020. You'd have expected to that one. When the scheme was announced, the government said that they would let people who were filing that self-assessment late, as long as they got it in, I think it was about the middle of April, they had to get their 2018-19 self-assessment in. So you would have already have paid a fine for being late in filing, but it did at least mean that you could claim. The other important criteria are your profits must be less than 50,000, or an average of the average of your last 3 years profits must be less than 50,000, and your self-employed income must be more than 50% of your total income. One of the offshots of that was that there was no support available under this scheme for anyone who was newly self-employed in the 2019-20 tax year, which has caused an awful lot of grief. And Crunch, I hope you will all have seen, Crunch did submit a letter on all our clients and members' behalf, saying an open letter to the Treasury, saying we believe that the support that was available, whilst great for those who could claim it, left an awful lot of people out. So limited company directors who get most of their income from dividends aren't well served, and sole traders who are newly self-employed also poorly served. I mean, the 50% of your total income means you probably had to have started earning from your self-employment very early in 2018 to be eligible to claim, which is not ideal for newly self-employed people. But unfortunately, in spite of repeated requests from numerous MPs on all sides of the House, the Chancellor has shown no intention of moving on these things, and really the reality is we don't see that changing. There may be a change for the fourth grant that's going to be made for the period from February to April. They haven't actually announced what that's going to be. The first grant was up to 80% of earnings. The second grant was up to 70% of earnings. The third grant will again be up to 80% of earnings, capped at 7,500. So they basically work out what your average earnings are over the last 3 years and then pay 3 months worth of it in a taxable grant. And they've announced that there will be a fourth grant, but they have not announced how much it will be or whether criteria will be any different. But it may be that would allow people who had become self-employed in the 2019-20 tax year to claim, but we really don't know. So that's pure conjecture at the moment. But you'd hope that the Chancellor might do something around that. Michael, anything else to cover on the self-employed scheme here?
Yes, I guess they clarified the eligibility criteria, and the wording or the phrase came out that businesses had to be adversely affected by COVID-19 anyway. And the adversely affected, they classified that one as being having lower income or higher costs due to COVID. So it's not just that maybe because you're entitled to what you should claim it, but your business must have been adversely affected. So if you compare, let's just say your sales in this quarter to probably the sales in the previous year's quarter, same period anyway, and then it's probably gone down, and the rest, these might be justifications as well for making that.
Yeah. Okay, great. So we'll move on from that one. Now, we've actually had 2 slides in here about the job support scheme. This first bit, I'm really going to hurtle through them because, as I said at the beginning, although the government is saying that the job support scheme will replace the CJRS scheme, the earliest that is likely to happen is probably the end of March. They've said they're going to reassess the extended CJRS scheme in January, I think, haven't they, Michael?
Yes.
And then allegedly this job support scheme will come in when CJRS closes. So they had 2 versions of the scheme. One if your business was still open, and one if your business was legally required to be closed. So if your business was open and you had employees that were furloughed, including directors, then what they were expecting was for the employee to work a minimum of 20% and for them to receive 73% of their total wages, with the government paying 61.67% of hours not worked. So effectively it was significantly less generous than the current CJRS scheme. But we've got the information there. I think almost certainly we'll do a new webinar when we get closer to this and it's clearer exactly what's going to happen. So I'm not going to spend more time on that scheme. Then if your business was closed, the support was sort of closer to what you're getting under CJRS, but again, not really going to cover that too much in this slide, but the slides are going to be available to all attendees on our COVID hub. So if you're interested in that, you can either read these slides or read our article about the job support scheme. So the next thing that we wanted to cover was the loan schemes. There's a range of loan schemes. There's 2 that, as I said, that may be appropriate to our clients. Most people, probably the bounce back loan scheme is going to be the most attractive for them. Both of the schemes are available to almost any UK small or medium business, and the loans that you can access are for between 2,000 and 5 million. On the bounce back loan scheme, it's a slightly smaller amount, so it's between 2,000 or 50,000, but it's also capped at 25% of your turnover. The important information for that loan is it's repayable over a 10-year term. Initially it was lower, I think it was 6 initially, and then they've extended the term to 10 years. The attractive thing about these loans is they're 100% government backed and there's no interest or repayments in the first 12 months, and then the rate is set at just 2.5% a year. So those are attractive terms for a loan. These loans are aimed at helping a business that other than coronavirus would be viable. So I think there is a criteria that you have to have not been an entity in a business in trouble. I can't remember exactly what the phrasing was, but you have to have not been in financial trouble as at December in order to be able to get it. But just about anyone could get these. If you've previously had a bounce back loan but you didn't take the maximum amount, the government have also now said that you could take a second loan, so you could then access up to the maximum, but obviously the total amount that you borrow will still be capped by the 25% of your turnover or 50,000, whichever is lower. Anything else to say about the bounce back loans, Michael?
I think it's just about the deadline for applications, which ends 31st of January 2021. It was initially supposed to be in November or this month anyway, but then they've pushed that back to January.
Yeah. Yeah, and then there is I mean, the bounce back loan, if your business is viable and you just need cash flow, they are obviously a pretty attractive way to borrow money. No interest or repayments at all in the first 12 months means potentially you could borrow the money, pay it back within 12 months, and you've had no interest or repayments at all. So as a cash flow measure, it could be attractive. We'd recommend you speak to one of our accountants about whether it's a good thing for your business to take that debt on or not. But yeah, it is obviously one of the easiest and cheapest ways you would be able to borrow money if you wanted to. There was then the scheme, the Sybil's scheme, always reminds me of Faulty Towers a little, but the business interruption loan scheme, which again is a government-backed loan, but this time they're only backing 80% of the loan, but the amount can be up to 5 million. It doesn't only have to be a loan. I think it can cover a few other things as well. There are no interest or fees again in the first year. But this is a commercial loan, so you have to find a lender that would be happy, that would have been happy to make a loan like this to you anyway. And the commercial underwriting means that your business has to be able to show that that loan would have been granted to you. And the rates are likely to be higher, and the rates are set by the different lenders. So you'd have to put a sort of a full loan application together dependent on whichever bank you're applying to. But you can apply to a number of different lenders on either of these schemes. If the initial lender that you approach says no, you're still able to approach another lender. I know that a loan doesn't always necessarily seem the right thing to do, but if you can't access support on one of the other schemes, but your business is otherwise viable, then they can be a great way to ease any cash flow worries that you have. Okay, so that's the last we were going to touch on the loans there. So our next slide is about the other support. So Michael, I don't know, do you want to cover some of the other things? Yeah.
I think you've skipped one slide.
Did I?
Yeah.
Sorry. I did indeed. Right, there we go. So other support available. Here you go, Michael.
Yes. This basically relates to those with business premises. So back in March, councils were paying out.
Sorry, I don't know why it's jumping around.
Back in March, councils were paying out monies to businesses with premises, and I believe anyone who should have received it by now. Anyway, if you haven't got it, then I guess you weren't entitled to it. Now, they also introduced, a different type of it anyway. And recently, when I'm sure most people would remember when the Manchester mayor was basically disputing with Boris over the type of tiers they should be and all of that. Now, it was all to do with the amount of support they'll be getting. So there are two main bits anyway, tier 3 and then the tier 2. Now, tier 3 were for those who were legally required to close. They got a higher amount than those in tier 2. Those in tier 2 were basically not required to close, but then they had reduced occupancy rates. So if your premises could probably have maybe 100 customers, but due to social distance and you've got to have 50, your income will be less. So they were supposed to get less anyway. So these are the amounts that they are paying out. Now, because of
this is if you're based in England, of course.
Yes, it's for England. Because of the delay in introducing it, you can actually get a backdated claim anyway to cover the period between August to the 5th of November. You should get in touch with your local authority if you haven't got this amount yet.
Yeah, and if you're not, if your business is not based in England, but you do have business premises, I believe that there are similar grants, but they're not set by central government, so we haven't reported on them on this slide, but there should be support available. But this support is only available for businesses that have business premises. So that is not a large number of our clients, but if you were eligible, you should have been contacted. You should have probably had your grants already for the original grants back in March. I'm not sure exactly when they're hoping to pay these second round of grants for November. Do we know the dates, Michael?
The second grant in November, we haven't got that date yet. So
no, so but they were announced at the beginning, at the end of October, beginning of November. So if they haven't been, if it hasn't happened already, that it should be imminent.
Yeah, I think the telling thing for most of our clients would be that if you receive it in March, then you should be expecting it now, or you should have gotten it now. So if you haven't got it, just contact your local authority and then find out about it.
Yeah. Okay. So beyond those grants, then, as we said, there was a delay to VAT payments. Michael, did you want to explain just briefly how that worked and what their options are for VAT payments?
Yeah, I think the whole point on some of these ones is that the government knows that cash flow is a bit of a difficulty for most businesses now. So if you have any VAT payments to make, the best thing would be to contact HMRC. They've got this thing under time to pay scheme. You could spread payment over a period, but obviously do speak to HMRC first to obviously agree a time frame in terms of these payments. Okay.
Yeah. And time to pay arrangements do still attract interest. So with any of these things that where there's a potential for you to delay payments, you do need to think carefully about whether it's going to be the right thing for you to do. Generally speaking, the guidance that that we'd give is if your business or yourself personally, if it's a self-assessment, can afford to make these payments and doing so wouldn't put your cash flow at risk, then it's probably a good idea to pay now rather than pay later.
Yeah, I think the one link to the payments on account for self-assessment, or let's say if you've got a self-assessment bill, the July one was obviously deferred to January. And then now they've also announced that if your tax bill is less than 30,000, you would have an extended period to pay. However, that is also subject to the fact that you haven't got any other tax bills. So let's just say that if you had a VAT bill outstanding, then that might obviously impact the decision to allow you to spread that payment as well. So these are the things you need to consider when you want to.
Yeah, we're able to help all our clients with information and guidance on this stuff. And the best way to do that would be to contact your client management team about your individual situation. The reduced VAT rate for hospitality and tourism industry. So when pubs and restaurants were open, this meant that they were charging less VAT on food, on alcohol. That is
included.
Alcohol was not included.
Yeah.
That is due to remain in place until the end of March. Then this is an interesting one, delaying filing of company accounts. So Michael, I believe the situation is that you can delay the filing of your accounts by up to 3 months automatically, is that right?
Yes, it's an automatic extension. When we first went into the lockdown, obviously businesses were struggling in terms of sending documents over to Companies House. So the process then was that we had to be contacting Companies House asking for extension and the rest. But then Companies House put in a blanket extension for all those who had to submit within this period. So if you check your Companies House account, you would realize that you probably have already had that extension put on your account. So you'll probably have an extra 3 months time to actually submit your Companies House account. However, the time to pay your tax bill, which is basically one that falls within HMRC's domain hasn't been changed. So if you delay your company's account filing, you kind of still have the same deadline for paying your tax bill, and you only, once you prepare the accounts, that is when you know what your tax bill will be. So that is why Crunch is basically advising clients to still maintain the same deadlines in a way.
Yeah, because it's always useful to know what your tax bill is going to be, and you don't want to get tied in a knot by HMRC threatening to fine you for not paying your corporation tax bill on time when you may not know what the bill actually is. So, yeah, I mean, with a system like Crunch, the way we work, as long as your accounts are all up to date, you've done all your bank reconciliation, then your corporation tax and your company accounts will hit the right deadlines anyway. So we would strongly recommend you continue to try and do that, because then you know what tax you pay, and if you need to apply for any sort of time to pay delays for any of your tax or VAT or anything like that, you know exactly what you're asking HMRC for. Okay, we touched a couple of times now on the self-assessment delay available. So as we said before, the payment on account that you would normally have had to pay on the 31st of July, that was able to be deferred to January. Now, I believe that was interest-free, that deferral. Do you agree with that, Michael?
Yes. Yes.
Okay, so your self-assessment payment on account from July was interest-free. However, although they have now announced that the payment that would normally have been due by the 31st of January, they have announced that you can delay that by up to 12 months using
That's if
an
your tax bill
extended
is
time,
less than 10,000.
unless
If your
it's more
tax
than,
bill
yeah, is
less than
less
10,
than 30,000. Yeah. However, if you do take advantage of that time to pay, there would be interest payments to be paid on that. So again, I know we've said it before, but we would normally recommend that if your business can pay, then you do. It's always better not to have large amounts of money outstanding to the taxman, even when they're offering extended time to pay. It's not completely free if you delay your January payment. If you haven't been able to access either of the support schemes for either directors or as a sole trader, then one of the things that potentially might be available to you is universal credit. So the government did announce an increased amount that you could claim for universal credit. I think it's £20 extra a week. And importantly, for people who are self-employed, they also suspended something they call the minimum income floor, which means that your universal credit your entitlement is based on your actual income, whereas normally what the minimum income floor rules meant was it was based on your previous income, which often meant that if a self-employed person was newly not having any income, they were struggling to claim. But that minimum income floor has been suspended till April 2021. On the 31st of March, then 2021, allegedly the universal credit amounts will drop by £20 and the minimum income floor would come back in. We'll have to wait and see whether that does happen or not, but that is the way it looks like it will work at the moment for universal credit. That's effectively, anyone can claim for it, but if you have any savings or your partner or household has any other income, then you may not get very much support on these things. But if you have no other income, no savings, then absolutely you should be speaking to the benefits agency about claiming universal credit. And we touched on the mortgage and loan payment holidays already, but if you have a mortgage or any loans or finances, you are able to get up to 6 months payment holiday. If you've already had a few months, you can still contact them and ask for more. And if you have, sorry, up to the 6 months. And if you haven't had one and you want to help your cash flow, then obviously a payment holiday could help. But as we said before, the interest will still be racking up. So again, I think it's one of those situations, if you can pay for your loans and mortgages, you should. And the stamp duty changes that they've announced, these were for, I think, were they only for first-time buyers, Michael?
No, for
No.
if you're second-time buyers, well, you do get a reduced rate, but obviously you would have to pay, depending on whatever the value of the property, you'll still have a bit extra to pay anyway. But
Yeah,
yeah,
but that was, yeah, so I think they made, I think the rate of stamp duty was effectively naught for the first £500,000. Is that right?
yes. But then if let's just say this is your second time buying a property, you would then have to pay, I think it's around 3% if it's up to 500,000 or so, and I mean it goes on from there.
Yeah. Okay. That was intended to stimulate the property market, and I think it's had some of that effect. So let's just double check our next slide. So we talked about this statutory sick pay rebate, that effectively the government paying you much quicker if you have to pay SSP for any of your employees. There was also a Kickstart scheme grant funding up to £6,500 per young person. Is this if businesses take on a young person, I think, isn't it, Michael?
Yeah, it's just to help boost the economy and then keep people in jobs. And
yeah, and also a £2,000 apprentice payment as announced. And then there was also there's £500, a sort of a one-off payment for those who test positive for COVID and have to isolate. But again, that was only if they were on a low income, and I think that was only definitely available in England. There may be similar schemes you need to check if you're not based in England. The other thing that I think would be useful to say is the link that we've given on at the bottom of this slide for the business coronavirus support finder is actually quite useful. It's very easy to use. You sort of put your situation in and they will tell you all the things that your business may be able to claim for. It can be easier to use that sometimes than to try and trawl through 100 pages. Okay, so that's, I think, more or less the last bit that we were going to cover about the government support is available. We've got a few minutes left. I did want to just cover some of the things that you can do to actually help your business when you're coming out of this. One of the most important things for any business, and we've touched on this a few times through these slides, is cash flow. Our cash flow forecasting spreadsheet is a really simple way for you to just predict what's going to be coming in and going out of your business over the next few months, and lets you predict your bank balance. The last thing you want to do as a business or an individual is run out of cash. So actually this sheet is well worth downloading. All our clients or Chorus members can get it for free from the link on the slide. We'll make sure the slides are available to everyone. The other thing to do is obviously, once you've done this, you'll be able to see what your outgoings are. You may then be able to approach the people that you are due to pay and see whether you can delay or renegotiate. Are you able to shop around, find cheaper energy suppliers or broadband suppliers or phone suppliers? It's really about just controlling your costs as much as possible at a time where income may be challenged, and work out what costs you might be able to do without. Anything to add to cash flow there, Michael?
no, I'm just conscious we've only got about 4 minutes to go. Still got
Okay.
about, yeah.
Yeah. So we had a couple of questions about the £500 payment, just saying, how do they judge income? I'm a company director and mostly pay myself in dividends. So as my salary is low, does that count as low income? I'm afraid it almost certainly won't if you have had dividends. Michael, do you know what the actual rules on that £500 payment are?
No, we don't know what the rules are. So I guess it's one will probably have to wait and then see, unless
You'd have to apply and see. We have had another comment from someone else saying that their director's salary wasn't classed as a low enough income. So it sounds like that is not going to be available for people easily.
But then the director's salary, I guess we need to know what the amounts they were talking about. So in one case, you might have a director paying themselves, let's say maybe 20,000 a year or something, or maybe someone might be on the recommended salary of 8,000 or so. We need to know what the actual amount was that was declared to be not low enough.
Yeah, so that's an individual situation, I think.
Yeah.
Really, that £500, whether it's available or not, it's not one easy answer. So I definitely think it's worth us touching on how businesses should account for any grants or loans received. So the first thing is maybe we'll touch on the grants first and then go into loans. So grants would be either under CJRS or SEISS. If you have been receiving CJRS grants, then I think our article explains where to record them in your Crunch account. Michael, do you want to add anything to that?
I think I was able to find one article that's basically linked to the loans anyway, but for those who are Crunch clients, obviously they could contact client managers or speak to accountants, and then we should be able to allocate these payments for them.
Yeah, but it's important to say that any payments that you have received from CJRS have to be put towards salary. And so you must make sure that they are recorded in your Crunch account, otherwise you run the risk of actually overstating your profits.
Yeah, just to clarify, the grants basically will be classed as taxable grants under the turnover section. But then what you have to do is record your actual salary, which is the expense, and the expense is then matched with that grant to then make sure that you aren't taxed for that. Okay.
Yeah, and you have a decision about what to do, because you're only able to claim 80% of your salary. So I presume normally you would still report the full 100%.
Yeah.
Okay. If you have got a self-employed income support scheme grant, any of the tranches, I believe the government have said that all of those self-employed grants will be classed as taxable income for the 2020-21 tax year. So that's the tax year that's going to end on the 5th of April 21. That's correct, isn't it, Michael?
Yes. Yeah.
Okay, and then the last bit for accounting for any monies received is if your business receives a loan under the bounce back loan or civils or anything. So how do businesses need to report that in their Crunch accounts?
Yeah, I think there's a link in this document that basically shows Crunch clients how to go about recording it. But essentially, the loans will be sat on the balance sheets as a liability. The interest will basically hit their P&L, and that basically reduces their corporation tax or income tax.
Okay, right. So yeah, we've got a link to a Help Centre article about accounting for the loans. So we've touched on keeping on top of your tax flow on the previous slide. Working from home is another thing that obviously lots of us are doing, both Michael and myself at home today, not in Crunch Towers. There are obviously expenses that you can claim when you're working from home. If you were already working from home before the pandemic, then it's very likely that we would have been encouraging you to make those claims already. We have articles all about these things, and your client managers can give you individual advice on what you can and can't claim. Is there anything you wanted to cover on the working from home element, Michael?
Yeah, essentially, if you have employees, they've got two ways of going about it anyway. Obviously, cash is going to be a bit tight for employers now, so the employee can either go directly to HMRC, make a claim with them for working from home, or if the business employers can afford it, they get the employees to make the claims with them, which then becomes a tax deductible expense from the company's point of or the business point of view. Anyway, the amounts are basically £4 a week for the 1920 tax year, and then £6 a week in the 2021 tax year.
And is that different depending on whether you're a limited company or a sole trader?
Yes, and just to add, sole traders can basically claim, depending on how many hours they work, they could claim 10, 18, or 25 pounds, these three amounts, depending on whether they work between, I think it's 50 to maybe around 75, or how many ever hours they work from home a month.
Yeah, so we have a link to, we have a working from home article in our knowledge section that explains all that. But again, your client manager will be able to give you individual advice on your situation. Worth pointing out, I think our next bullet point there, preparing for future shocks and business continuity. I think if there's one thing that the pandemic has shown us all is that you definitely need to plan for the unexpected. We have a business continuity plan template that sort of covers all the things that you might want to put in place for things like global pandemics, but also more common things such as, you know, fires or robberies or theft like that. So we would definitely recommend that you spend a little bit of time and actually do a business continuity plan, even if it's just to know how you would react to a situation. And then I think the last point to cover on this one is what businesses who are facing losses should do, Michael. So I'll hand this one over to you.
Yes, if you are in business and obviously your income is down, expenses remain the same or higher, it's inevitable that you are going to make a loss. Now, what you do with a loss is basically dependent on your situation anyway. For companies, losses can be carried back to your previous year to basically claim back some of the profits, some of the tax you've paid in the previous year. So let's just imagine that if in this current year you've made a loss, but the previous year you made profits and then you had corporation tax to pay, the loss in this year can be carried back to your previous year. It's then used to, let's say, kind of reduce your corporation tax for the previous year, and then you get some rebate back anyway. If it's your first year and then you didn't obviously have a previous trading year, that loss can also be carried forward. For those who are sole traders, the loss can be used against other income. So let's just imagine that a sole trader has got a part-time job of being an employee as well, and they've been paying taxes there. That loss can be used to reduce their income from employment, and then they get a rebate as well. So there are various things that can be done with the losses, but obviously speak to an accountant if you are one of our clients anyway, and then you'll get some advice on that.
Yeah, so that effectively, if your business made losses, whether you're a limited company or sole trader, there may well be the ability for you to reclaim either some tax that you've already paid or have it offset against future tax bills. So it is definitely worth getting individual advice on your situation. Okay. I think that has brought us to the end of our slides today. We're a little bit over time. Thanks for sticking with us, so many of you. We've answered all of the questions that came in. Thank you so much for the questions, a good 10 or 15 of them. We managed to cover them all as we've gone through the slides. If anyone does have any extra questions, you're very welcome to put them here. But of course, if you're a Crunch client, you have your client management team and our expert accountants who can give you individual advice rather than just advice on a webinar. I hope that you found these useful. One thing we did want to say, almost all of these schemes are accessed via the gov.uk website. We've got on Crunch, our own sort of COVID hub, where we'll make sure that these slides and recording of the webinar goes. We've been keeping our CGRS guide up to date, our bounce back loan guide up to date, our self-employed income support scheme guide up to date, and hopefully you've been finding them useful. It's certainly been taking our time, and my goodness, there have been so many changes. I'm not surprised if anyone else is confused, because I'm confused, and it's felt like my only job to keep these things up to date for the last 6 months. But we all have other things that we have to do as well. So Michael, I'd just like to say thank you very much for your time today. Thank you everyone for attending, and best of luck with the future.